I'm going to show you some powerful presentation, okay, which is FD Proxy. So how many of you are in a 30% tax bracket? Just type 30 if you are in a highest tax slab. Just type 20 if you are in a 20 tax slab. Just type 10 if you are in a 10 tax slab. And if you in nil, you can type in nil. That's perfectly fine. Okay. I think most of you are in the highest tax bracket. Some of you I can see in 20, some of you are in 10, some of you are in nil also. Okay. Got it. Got it. Super. Thank you. So what I'm going to share now with all of you is how you can increase your returns without increasing your risk in the fixed income side of the things. Okay. This is not a substitute of equity. Okay. Whatever I'm going to share is, suppose you are doing FD or putting heavy amount in fixed income where it is highly getting taxed, like your full amount is getting taxed, how to not increase the risk and optimize your overall returns. That is what we are going to learn. And this will again give you some perspective around diversification also, how the risk plays out in different scenarios. All those things we are going to learn now. Okay, so around 20 minutes we'll do this or that feedback. So can I share step by step this story? And this is like in a movie format. Okay, it's a movie format. How many of you have seen or know about old movie? There was a movie called Amar Akbar Anthony, where Amitabh Bachchan and all those guys were there, and very nicely, there are like three kids who get separated and go into different houses, and one is Hindu, one is Muslim, one is Christian, and all of them get nurtured in a different way, and then life takes over and all things change, right? So we thought, this is a very slightly heavy topic. So how can we actually make it simpler and make it easy to understand for all of you? Okay, so this is like in a story style, and you will understand at the end of it how to actually think about FD proxies. And credit goes to our Anand, who is the CEO of our Omni compounding arm, where he has conceptualized this entire story. Okay, so you can even follow him on LinkedIn. This is what is the blockbuster release we are going to do, okay, which is Amar Akbar Anthony. And we will try to understand what are the difference in terms of FD proxy and how to think about it in the form of these three characters. Okay, so first, there was this three close friends once upon a time, Amar, Akbar, and Anthony. All three were sensible guys, okay, conservative, careful with money. So, majorly, they wanted to have some amount put into fixed income kind of things where they wanted capital protection. Okay, they didn't wanted to lose money and they had to put their money there. So they worked hard all their lives, and at the end of retirement, each of them had a 5 crore corpus, which they got. Now they wanted to like invest in an extremely conservative thing. The corpus was really big, so they didn't want to take any risk. Mainly, they thought, let's put money into fixed income. So these are the characters, how they think. Okay, so Amar trusts, Akbar thinks, and Anthony is more of a strategy guy. Okay, so what happened? Let's see. So they basically, met after 10 years, and this is what happened. Okay, Amar survives, Akbar sustains, and Anthony is like thriving. Now let's try to understand what happened, why this situation happened despite all three of them starting at a similar point, but 10 years later something drastic happened and they were not able to like have the similar lifestyle out there. Okay, so let's understand what happened in this journey. So this is what happened. Amar put all money into a cooperative bank thinking then FD is safe, and that bank unfortunately collapsed, and he learned the hard way. He thought the banks are insured, but he got 5 lakh rupees as an insurance. Now, how many of you know that maximum limit of insurance in bank is 5 lakhs. So tomorrow, if you lose money, if the bank somehow defaults or anything like Yes Bank also happens, Yes Bank got took over by SBI. Um, the maximum insurance we get is 5 lakh, right? So I keep telling this, nothing in this world is like safe. Okay, there is a risk everywhere, right? Now, not every bank defaults, but it can default. There are always chances that something can happen, right? So nothing is risk free. Please remember that. Okay. So he did this mistake and somehow he got, wiped out. And that is the reason, one of the things, I do in my own thing also is, even if I put money, I have multiple bank accounts, like three different banks. I divide amount into all three. So for whatever reason, something happens to one bank, the other is there and the other is there. Now the point is not there. The point is very simple, that FD is also not 100% secure. There is always a some risk, not risk like equity, or not risk like uh, F&O and all that, but there is always an element of risk involved even in FD. There is nothing which is safe and secure in this world, nothing outside. Even US dollar is not 100% safe. Okay, nothing is risk free. Now, Akbar is more of a thinker guy. Okay, he's more of a tax saving guy. So he thought of diversification. He thought, okay, I'll put some money in FD, but I'll also put some money in arbitrage fund so that I can get some tax advantage, because you get capital gains in arbitrage funds, and particularly if you have slightly longer horizon, 12.5 long term capital gains, you get it, right? So he did some smart thinking and all those things, and with cess and surcharge and everything, instead of 35%, he was able to reduce his tax burden to almost 15%. So he did some smart thing where he invested into some of these arbitrage funds, which are as good as, uh, you know, kind of fixed income. Some element is there here and there, which is arbitrage, but then he basically escaped the tax. And then, Anthony took minimal risk. So he said, whatever tax money I'm letting go, right? So around 35%, if you consider cess and surcharge and all the additional things which you get, 32 to 35% based on how much surcharge you are paying, you end up paying. So he thought a very simple thing, that, hey, out of 100 rupees, which I'm earning, I'm anyways giving 35% to Nirmala Sitaraman ji. If I can take a risk of that 35%, which is any which way is going outside, and I can save some bit of it from it, then it will be a great deal, because the remaining is anyway safe, and this 35% is actually working for me. And I'm basically using government's money, which I'm anyways giving to them, to basically take my risk. So ultimately, you are taking risk on the shoulder of government, whatever tax amount you are paying. So he actually did a review with a tax expert advisor, and he built a fixed income portfolio with multiple things, some bit of FD, some bit of mutual funds. Again, mutual funds doesn't always mean equity mutual funds, it could be a debt mutual fund also, right? So he did a mix of all NCDs and SIF and all those things, and basically he tried to fund his risk through the tax outflow which is going to get. And because of that, what he got was some bit of bump up in returns, which is not too big, 1 to 2% bump up, better tax efficiency because he was able to save on tax. And, as a result, he was able to live a luxurious life enabled by an omni compounding approach without any meaningful increase in risk. So, this is what happened. Now, how many of you want to see the actual numbers, what happened in the background and how it compounded, and how this three guys changed the entire thing? Like, one just survived, Akbar more of kind of sustained, but Anthony was like who was thriving. Yes. So this is what exactly happened in the background. Like, why I shared these stories, to just understand this math of it. Okay, so like if you are doing FD, currently 6.5% kind of return you get it. If you do post-tax, which is 35% taxation, post-tax return is generally like around 4%. So you're not beating inflation, you're not meaningfully compounding, right? Uh, Akbar, what he did was some bit of arbitrage funds and mix of debt and some bit of arbitrage. He kept it for 10 years. He got some slightly bump up returns compared to 6%. He got slightly higher returns. But the most important advantage he got is here. So if you consider cess and everything adding up to 12.5 capital gains, he was still paying, instead of this 35%, he was paying only 15% tax. So after tax, the good thing that happened is he was at least able to like be at an inflation level. That is why it is called sustains, right? And if you see the additional amount for the 5 crore investment, he was able to additionally save because of this strategy was around 1.8 CR. Okay. Now, Anthony, because of all these combination, he could bump up the returns by 1-2% extra, and he's able to do around 9.5% returns. And again, he's doing mainly in the fixed income related things, but more of tax efficient and more of vehicles where he is not hit with too much of tax. So he's also still paying only around 15% kind of tax. And after tax, he's able to generate around 8.5% return. And that bumped up his additional money by around 4 crores. So almost whatever he invested, he was able to, 80% make extra of that money by just smartly using his own tax money at his advantage and going into a lower bracket and strategizing his funds in a powerful way. Okay. So this is what, you know, is the most important thing in your journey, that if you are able to diversify, liquid funds will not help you here. Okay, so there are like arbitrage funds, there are a lot of other things which are lower tax bracket, and even they are bundled in a mutual fund structure, like fixed income bundled in a mutual fund structure, that particularly if you hold it for 2 years, there is a lot of tax advantage which you can get. Okay, so if all of you are clear in terms of, you know, uh, different ways in which they did and the kind of drivers for the returns, like which were the key drivers. Mainly here there was bump up of returns, here also there was bump up of returns, but more than that, the major driver came in through the tax efficiency. So if you are in a 30% tax bracket, I keep telling this, if you do FD for some bit of emergency fund and all those things and some safety, it is fine. And there are, of course, a lot of options available in the fixed income space also. But beyond a point, if you have a lot of money lying in fixed income, particularly in FD, it is not a very tax efficient way. Given earlier, there were a lot of advantages of doing FT and ATC and a lot of benefits you used to get, but now they are also removed. So essentially, if you can use that tax money to slightly bump up your returns by efficiently planning it, you can actually enhance your returns. Okay, so that is what you need to think about. And this is what are the instruments. Many of you were asking like what could be instruments you should explore. So FD is a plain vanilla thing, but you can actually explore instruments like arbitrage fund, right? So they basically do arbitrage. They looks like equity, but they do like more of calculated arbitrage. So they basically do hedge. So one place they basically take you know a bet on buyback, and some other place they are hedged with some other instruments like futures and all that. Okay, and you get returns similar to FD, but because they are lower tax than FD, you get straight that tax bump up. Then you have NCDs. Now again, NCDs, not every NCD is good. You have to select NCDs also very carefully. You have to check the credit rating. But if you are able to select right NCDs, they lend money to company. Like there are NCDs of Bajaj Finance, there are NCDs of ICICI also. There are NCDs of Shriram Transport Finance. So there are a lot of NCDs which are of very high reputed company. Like if you compare Bajaj Finance and HDFC, the kind of quality they are almost same, right? So whether you put a FD in HDFC Bank or you put a NCD and give it to Bajaj Finance, the risk is not too different, right? But even for that slight increment risk, you are basically getting returns higher than FD. And then there are a lot of SIF which are come up, which is a overall structure like a mutual fund. You get a tax advantage. The ticket size is also like some 10 lakh rupees, but they get better control, and there are a lot of underlying experts who are handling it. So these are four major instruments you can think about if you want to create a structure like this. You can, of course, download the app, which is our Omni Compounding app. You can download it. You can see options there. So we have a special category there in fixed income. You can actually explore a lot of ideas there, and you can see if it works for you. This is our, if not many people know about it, but this is our community-driven financial services company. So Omni Compounding we launched in last year during reboot, and this is India's first community-driven financial services company. So it is run by our members, like Anandji is running, and then we have Anbuji, who is a CEO, and we have a lot of our advisors who are part of our own community itself, right? So it is by the people for the people. And if you need more support also, a lot of our community members are part of the advisor team. They are qualified, they have been through the journey, they have completed certification, they have got SEBI license and everything. If you need more help, you can scan this, do a free one-to-one meeting. They don't charge from you. And you can see if something fits into your bucket. If you have a big amount lying in FD, you don't want to take a risk of that, but you want to just optimize it, then this is the right way to go forward from here. Okay. If you have any questions, please feel free so that I can answer. And then we'll move to the next segment. I have a lot of updates also to cover. So we'll cover the updates and then we'll go to the fast team. So if you have any questions, please feel free. Can you share the chart once again? Yeah, of course. Of course, I'll do the comparison chart, right? The percentage and everything. I'll share it with you. Yeah. Superb. Is there any amount specification for using? No, there is no amount. You can buy 100 rupees worth of things also. It's all, there is no minimum amount that's there. Okay. Are SIFs safe since they do long short? There are, again, SIF as a blanket. There are a lot of things that goes into SIF, right? Some of them take extremely high risk also, right? So you need to have a right category of SIF, right strategy of SIF to go about it. Not every SIF you can jump in just blindly, okay? Each SIF have their own strategy. Some do just long, some do long short, some even do future and option hedging. A lot of things go into it. So it's not like it's like telling, which equity mutual fund is safe. So there are large cap mutual funds also, there are mid cap mutual funds also, there are small cap also, there are sector specific also. SIF is just a category like a mutual fund. Okay, but there are a lot of different things going on there. So that is why you need the right advice and right structure to make it happen. Okay, super. Does SIF is similar to PMS? No, they are not similar to PMS. They are slightly different way they do things. Yeah. PMS have much more restrictions. Their ticket size is high. There are a lot of they basically hold your fund. A lot of things are there. Uh, is it mandatory to have a PAN card to invest? Some workers are searching for investing in hundreds. I think with Aadhaar card it should happen, but I think if in your factory, if you have people who don't have a PAN card, this is the best service you can do to them. Have that PAN card done. Yeah, just guide them, and I think it's not too difficult to get a PAN card. Okay, so if any worker in your company are like that, you can get there. Okay. So what I'll do is I'll also get Mr. Anand with me. He's here with us, so I'll also get him. So if you have any questions, maybe if it's something is relevant, he has also passed the SIF exam, so he knows some bit and pieces of those aspects also. So all of you can welcome Anand. All of you can type welcome Anand in the comment box. Let's welcome Mr. Anand. And yeah, Mr. Anand, feel free if you like any questions to address. A couple of them related to SIF, and maybe two, three questions we can take. But anyways, they can always connect one-to-one with one of our team members and do it. But yeah, please feel free.
Yeah. Good evening. So I'll just talk quickly on specialized investment fund, and then maybe Vivek, if you can just pick maybe some questions I can answer from there, whatever you feel.
Sure.
So I think, like we all know that mutual funds is very heavily regulated by SEBI. So similar to that, they created another version called as SIF or Specialized Investment Fund. In fact, these have been released only in October. And if you like how Vivek ji also says, mutual fund does not mean equity. People think it is equity, but actually there can be pure debt products, there are hybrid products, there are mutual fund for commodity. So like that, basically in SIF also there are three major categories. One is equity, other one is hybrid, and the third one is debt. So in mutual funds, you are only long only, similar to techno fund. We cannot take a short in mutual funds. SIF gives a provision for shorting either through futures or options, and up to 25% of the portfolio value can be taken. So in SIF equity category, I think that's where it was asked, right? So you typically take the short to generate an alpha. So essentially there what you're trying to do is take more risk than an equity mutual fund to generate higher return. But what in this fixed income category, what we are proposing is we are proposing the hybrid SIFs that we have researched and we are studying. So here basically the future is used more as a hedge. So essentially what you are doing is these are also called as arbitrage plus category. So you're taking a risk very similar to an arbitrage fund, but essentially you're getting a much higher return because you are having more kind of options to do. Debt SIF, because of the tax currently at the bracket rate, there is no real use case. So what we have seen is in the last 2-3 months, close to 5,000 crores has been raised in SIF across the industry actually. Almost like 3,500 are in hybrid, and only the remaining is in kind of equity, and debt is still kind of, I think it's waiting for the T20 to open up. So I think there's not much of this thing, but the tax part of it has made the whole thing very unattractive. So that's a very quick primer on SIF. The only disadvantage, not disadvantage, I would say the only criteria that is defined is since it does a options kind of a thing, the ticket size is bigger, the minimum investment is 10 lakhs, while for a mutual fund it is 5,000, because somebody was asking what is the minimum amount one can invest through Omni app. So I think since Omni app is also based on a digital onboarding, that's why I think PAN card is mandatory. But I think Vivek ji said it very nicely that if you have, you're an owner of a company and if you can help people to get PAN, you can also make their life better. So definitely we need PAN. Mutual fund, the minimum ticket size is 5,000. SIF is 10 lakhs. And also there was a few questions on NCD, so I'll also kind of try to answer it. In the classical sense, NCDs are also taxed like debt, but I think we have partnered ourselves with one of the top wealth management. So they've structured the product in such a way because there are clauses in the IT law depending on whether an NCD is listed or unlisted. Listed means it is listed in an exchange. So if it is listed in an exchange and if you hold it for greater than 2 years, then basically you get like a equity kind of a taxation rate. But you also, I think somebody had made a comment also, which is correct, that if you take an NCD and redeem it before kind of a 2 year, then definitely it gets taxed at slab. So we have curated. See, I mean, there are like close to 5,000 mutual funds. There are so many NCDs. So what really I think Omni is helping is in terms of all our community members are coming together. We are doing this research, and we have done this curated products that are readily available for you, so that you don't have to spend time in terms of going through all the nitty-gritty details, and very easily without taking much risk, especially if you have a portfolio that is greater than 10 lakhs, then this portfolio of mutual funds, NCD plus SIF can give you a 1 to 2% additional alpha actually.
Perfect. Thank you. Gigi is asking like any NRI restriction or only resident Indians can do it is for they're possible for
I think it's a
NRI?
case to case basis, so it would be nice to know because NRI also specifically US, Canada, they have a lot of restrictions.
Correct.
But outside that, NRIs in general, there are no restrictions. So I think so that's why it's a case to case. So you can either drop a note. Maybe we have that in the previous slide, Vivek. Maybe we can
Yep.
show the support ticket that we have, support at omnicompounding.com. You can just drop a note or, reach out to any one of us, myself, Anbuji, or anybody. We'll be, kind of glad to have a one-on-one and explain to you actually. So the support at Omni Compounding goes through a ticketing system so that it gets addressed quickly. And I think Anbuji is a hero who makes sure that everything
Yeah.
gets a very, very timely response. Actually, he's
Yeah.
also a star, diamond member.
Yeah. Superb. What is the fee for one-to-one? There is no fee. It is like it's all complimentary for all the Technofunda members, guys. There is no fees. And we are also like training our associates, so we also want first our members to interact so that they also get the nuts and bolts. They understand how to do the entire drill, and that is what we are also training them side by side. So yeah, there is no additional fees as such. It's all part of it. Yes. Um, okay. What are hybrid SIF? Anandji, I think your
Yeah.
exam
So
is coming to test here. Like all preparation, I'm sure you have done it.
yeah, no, so basically, in equity SIF, typically you can only invest in the world of equities, and you can take both a long and a short. So in a hybrid SIF, what you do is like a portion of it, let's say somewhere between 35 to 65%, depending on the type of hybrid SIF. In hybrid SIF, also there are multiple classes. So somewhere between 35 to 65% would be equity for a hybrid. The balance majority chunk can be fixed income products. And some of them also take a minimum like 5 to 10% kind of an exposure to commodity or REIT. So again, there are in hybrid, essentially it means that you can do asset allocation across these four major products. That is equity,
Yeah.
fixed income, commodity, and some of them also do real estate through REITs actually. So that is what hybrid means.
Yeah. And yeah, Rajendra Singh is saying like if bank defaults, our 3-in-1 account also will not be able to sell the shares. No, it is not like that. Your shares remain in demat, right? So it doesn't depend on trading account. Tomorrow, if the trading account gets closed, still it is in your demat, it's safe. So until something happens to CDSL, your shares are safe. Until anything happens to CDSL or NSDL, it's with there. Yes.
Yeah, I think there's also one repeated question that is coming in terms of fixed income, how it can be done. And basically through SIF also can we do fixed income. So only purely through SIF you cannot do because it has restricted windows. And plus you won't get the tax benefit, if you don't hold it till at least 1 year in some cases or 2 years in other cases. So what we kind of help you do is what we call it as the portfolio or the bucket kind of a strategy where whatever your 1 year kind of a thing is either held in a liquid or an arbitrage fund, remaining things can be put into a hybrid. And a portion of it, like how Vivek ji said, the tax part which would have anyway gone, you can call it as a risk bucket and maybe you can put it into a higher bucket. So a kind of a 3 bucket strategy we suggest, which has to be curated and has to be personalized for you. But with that, using SIF along with mutual funds, we can create a fixed income kind of a product for you.
Yeah, perfect. So Srinivas is asking, do we have to open a demat account with Omni Compounding? It's not needed. It's an existing demat. It goes. So you just need to register. Automatically, your demat gets mapped. It goes directly. The transaction goes through BSE Star Mutual Fund. So there is no problem as such.
No, Vivek, so currently we are only supporting account of statements, or in other words, the non-demat portion we are doing. So as to make it very, very easy. But we are also, kind of exploring the demat option because storing in demat also makes it Safer. Only point is if it is in demat, then a transfer and other things becomes complicated. In fact, a lot of other vendors are mandating demat so that, then once you invest through them, you cannot take it out.
Correct.
We want to be a little flexible, but at the same time, both the choices are there. You can have it in the non-demat format, which is also known as the statement of account, or you can have it also as demat. And, we support both of it actually.
Yeah. Can private limited company also register?
Yeah. Private can also register.
Yeah. So there is a slightly lengthy process, but can be done. We have cracked that. Okay.
No, because in fact, a lot of fixed income products are held by companies actually.
Yes.
The corpus, because you need working capitals and other things. So we see that actually in the entire mutual fund industry also, almost you would be surprised that almost 60% of the money is in debt mutual funds, and most of the corporates hold that actually.
Yeah. Does this app allow SIF? So there is some bit of additional tier for SIF, which the team will help you out. So that
No,
is,
the
it
app
can be
is
done.
supporting it, but we can help you. App
Yeah, we
supports.
can help you. So it's all there inside, but you just need a separate form of
But we will
onboarding.
guide you because, I think maybe, little, maybe the app, may not be very self-explanatory at this
Correct.
point in time. That tech part we are working on. In the meantime, we have a very good support team and very good advisors who can take you step by step to get it done actually.
Yeah, this is very interesting, Anandji. Are the returns fixed or it can slightly vary from time to time? Like, are
So,
these guaranteed returns or they change?
see, there is nothing guaranteed in this world, in the sense that even bank FDs, once you book it, the rate is fixed, but it also changes over a period of time because everything kind of tracks what we know as the GSEC rate, which is essentially nothing but the 10-year government security rate. So even the bank FD changes, right? Because every time RBI announces a policy, that rate kind of changes. But in bank, one of the advantage you have is once you book the FD for the entire lifetime, the rate remains same.
Yeah.
Similar is the case for NCD also.
Yeah.
Okay. So once at whatever point in time, if you book it and hold it till maturity, then there is no problem. In between, it can change because of the interest rate change and everything. But if you really look at it from end to end, that is till maturity, there is no change. So in that sense, bank and NCDs are very similar. Arbitrage, also what happens is in arbitrage, the way the arbitrage works is they take a spot position and they take a future position. So typically there is a intrinsic value and there is a time value. So arbitrage only plays on the time value. And if you really see, the time value is again equal to the 10-year GSEC rate.
Yeah.
So if you, let's say, hold it for a long time, like 2 year, 3 year, the returns are variable because it will depend on the average GSEC rate at that period. So for 2 years, if the government rates were stable, then you will get that rate. But let us say if it is in a market like today, where it is kind of slightly, it will, kind of go down, then, that interest rate will, kind of go down slightly. Same risk is there for SIF also. So SIF and arbitrage fund, the rate is not fixed, it is variable because it is the average rate, because it kind of accrues month on month. In that month, whatever was the 10-year rate, that much you get credited. The next month, if the government reduces the rate, then your rate goes down and that accrual will happen like that. Let's say in the fourth month, if the interest rate goes up, again, the interest will go up. So it kind of tracks an average value there.
Correct. There is an interesting question. Is there any lock-in period or there is any kind of fixed number of months we have to do? Is there anything like that?
No. In fact, arbitrage fund, the lock-in period that is needed is only 15 days. Okay.
Yeah.
Beyond that, if you do, the only problem is you will get your tax hit actually, because then you get in arbitrage fund, then you get covered under short-term capital gain, which will be 20% plus cess instead of 12.5. In case of SIF, also the same rules are slightly longer lock-in of 1 month is there. But then again, we will guide you. Certain things, the tax rate is 1 year. Certain things, the tax rate is 2 year. So there is no lock-in per se, but if you do an early exit, then tax arbitrage, you may end up, kind of losing. NCD product that way is illiquid in the sense that because they have structured it in such a way that the interest rate is fixed. And also, if you want tax efficiency, then you have to hold it for a minimum of 2 years. So NCD products are basically fixed tenure products, right? Either a 2 year or a 3 year product, actually.
Yeah, perfect. Superb. So more, I think you can guys just scan the QR here, connect with one-to-one based on your personal profile. Also, it might vary. We might also need to check whether your risk suitability is there, your liquidity situation, your goals. A lot of things will go into it. And sometimes you might discover that you don't actually need to put a lot of money into fixed income and you might need to move into equity or equity mutual funds. So we might even guide you there also, right? So you can just scan here, connect with one-to-one with the advisor, and it's complimentary. You can just, and you don't even need to like compulsorily, book it. It's only if it is required, right? So if you feel that, hey, I need some support, I'm paying too much in taxes, I'm losing a lot in terms of compounding, then scan and connect with this. Yeah. Superb. Can we enter our already held MF with bank like SBI? And yeah, you can move over here if you have a mutual fund there, and you can even get help from our advisors to do that. That's perfectly possible. Again, we might need to check case to case basis. Sometimes it might not be possible, but you can just scan, connect, and we will see case by case. And even you can just write to this email or do a phone call on this number. Our team will support you on that. Yeah, that's the easiest thing to do if you have any clarification or doubts. Do we have any indemnification for this investment? It is all listed, unlisted, regulated security. So it's all the products are regulated by SEBI.
Yeah, and especially for the NCD is a high risk product, but for
Yeah,
that I think almost like 110% of the NCD value is put into an escrow account actually. So
correct,
that only those kind of funds and which have a stable A plus rating plus this thing, those we do it actually.
correct, correct. Superb, great. So thank you so much, Anandji, for so much of clarification and answers during this session. I'm sure when they do one-to-one, they are going to discover a lot more things and get more and more clarity to move forward. So all of you can type MPDY for Mr. Anand for being here and guiding all of us. And of course, some of our members are already part of this, advisors team. We'll be opening up slots also for you to become advisor. Like if you are somebody who want to earn a side income, do a service to people in a right way, not missell things, but guide them in a right way. Uh, we will open it up soon. We are doing a first batch of around 200 people, and then as we move forward, we will be, inviting many of you who wants to like be part of this journey and who wants to guide other members also. Yeah. Thank you so much, Anandji,
So it
for
looks like people have liked my name. So it's
yes.
called as ATM Anand.
Yeah. It's literally ATM. His US portfolio is actually working like a ATM actually. Yes, awesome. Thank you so much, Anand. Congratulations again, and thank you for all the input.